Good morning and welcome to Access to Finance. I had a pretty good idea of what I wanted to cover in this session, and I put something together and then started doing a bit of research to just check that I covered everything, and then I realized I hadn't even touched the edge of what is possible to cover in this session. Towards the end of the session, I will share a link to an article that I found online, which I found is probably one of the most comprehensive, easiest articles to absorb that I have found in a very long time in order to access finance in South Africa. So if you have any questions, please feel free to ask. If you have I'll ask you a few questions as we go along, but I will then also share the link to the article at the end of the session for you to go and do a little bit of additional reading as you go through. So what we want to look at today is obviously the challenges of access to finance. What are the typical things that small business owners need finance for? What are the different types of finance products? The requirements that your funders will have from you. And as you can see, there's so much here to cover just under finance products. There's no way we're able to do it in half an hour. So hopefully I'll be able to touch on the most important aspects for you this morning. So I think it's important to know that in South Africa, we have one of the most robust financial and banking sectors. We also have very strict regulation compared to other parts of the world. It's done us really good as a country when the rest of the world was falling apart at the seams because of the financial crises and economic problems. Our banking sector managed to get us through those times. Because we have a robust banking sector and because the terms and conditions and the lending requirements are so very strict, it also makes it one of the most challenging places in the world to get your hands on finance. So one can look at it in one of two ways. It's terrible because we can't get finance, or it's great because by being strict and by being very proactive in the way that we lend money, and that's not just our banks, all our financial institutions, we are able to protect the consumer better. We are able to protect small business better. So I know sometimes it feels like you're knocking your head on a wall, but the reason it is like that is in order to protect everybody within the country. So I'd like to start off by asking the following question. And you guys, if you can just show me by either Kareem, I don't know if they can put their hands up or if they can put something in the question and answer screen. If you could just give me an indication whether you have tried to access money, whether it's an overdraft or a loan or asset finance, whether you have tried to access money in the last, let's make it 2 years. So let's say from 2019 onwards, and whether you were able to access funding. So I think let's make it first. First question is, have any of you tried to access funding in the last 2 years? Okay, I see some raised hands. That's probably the easiest way. Thank you, Neil, Louis, Peter. Awesome. Okay, so there's obviously been some attempts to getting our hands on money. And then can I ask, Carlton, thank you for raising your hand. Can I ask, obviously, if there were some attempts to getting our hands on money, were we successful or not? So my next question, if you can actually include it into the chat box, is what were your biggest challenges? So if you had been trying to raise money, what were the biggest challenges that you experienced? So if you go to your little instruction screen on the right-hand side, it says more. If you click on more, there's a chat line. Click on the chat line, and then you can just input your answer over there to say what was the biggest challenge. So I think While we're waiting for some of that feedback, what I find often the guys complain about the most is the amount of paperwork and administration that needs to be put in place in order for me to access some funding. And sometimes it's not even a lot, sometimes it's a little bit of money, but it feels like they want a blood and a stool sample with the paperwork that they require from you. So you have to understand our financial regulations insist on financiers needing this information. They can't just have the haphazard monthly accounts. They need proper financial statements and all the other stuff that goes with it. So I love this meme because I think this is often what the bankers feel like. You asked for $250,000 in this case, or rand, and then you complain about sending me financial statements. For heaven's sake, people, what have you been doing for the last how many ever years? Accessing finance should not be difficult or impossible if you're already running your business well on the financial side. So if your financials are up to date, your record keeping is up to date, you've got all the information that you need, then your accessing finance should be a lot easier. So I've said this a million times, and I will say this today for the last time. Make sure your financial reporting is up to date, that you're on top of what is happening there, because when you need money, this is what they're going to need from you. They're going to need this information, and you won't be able to access money if your information ducks aren't in a row. Okay, so I think for many of us, there are challenges to finance. And I often get this question is, what if I or my business has a bad credit record? So I think let's start with that. Financiers have got one job, and that's to minimize their risk. And in order for them to minimize their risk, they're going to look at your financial history, and your credit rating or your credit record is part of that financial history. And when you own a business, they often look at your personal financial history and the business's financial history as one. So they will look at the two together, even though the business is a separate legal entity. So if you have a bad credit rating, the good news is it can be improved. So your first job, if you want to access finance, but you know that this is a bit of a problem, is to restore your rating. So visit Experian or TransUnion. You have to visit both because they run separate databases. So you may be looking at one, but there may be different information on one of the others. So start implementing a payback plan, put things in place to get yourself off those blacklists or bad credit score lists. And once you've started payback or you've started implementing plans to get off that list, follow up. They don't wait for them to come to you to say, oh, okay, good job, you've paid your debt, we can take you off this list now. So start implementing a payback plan, follow up. If you are struggling and you find that it's not happening, or you're struggling, or they're not doing what they're supposed to be doing, you are more than welcome to contact the Credit Information Ombudsman. It's quite interesting. I was reading quite a few articles where they say they receive way less complaints from small businesses than they expect to. So obviously there's a bit of a gap in information about small businesses being able to access the Credit Ombudsman. Okay, the other option is to sit it out, okay? Strictly speaking, according to the law, they can only keep you on a list for 2 years. So for bad debt. So if you can wait it out, that's one of the ways in which you can get your credit record cleared. But keep in mind that then again, you also have to follow up. So after 2 years is up, you have to go and check that they have cleared your name. And then I think it's always important to be able to explain yourself, to understand the situation. So when you are applying for finance and maybe your credit rating is not the best, that you do have a story to explain what happened. I mean, all of us have at one stage or another, there's a pharmacy bill we didn't pay, or there's a Edgar's account we didn't pay, and then 3 years later it pitches up on some other credit score. So explain yourself, figure out what went wrong, fix it if you can. So I think, if you have a bad credit score, this too shall pass, in the words of Oprah Winfrey. So don't stress too much about it. Your job is to figure out what caused it and go and clear it. Be proactive about clearing it. Okay. If the credit score cleaning is still a problem and you are unable to do that, there are alternative lenders available in South Africa, and you can explore alternative lenders, for example, the Small Enterprise Finance Agency, niche SMME financiers, then many government grants available, family and friends, and then obviously venture capitalists. As I said in the article that I'm going to refer you to, there is more information on each one of these. So I think the big question is, what do we need finance for? Because depending on what we need finance for, the institution or the lending institution will want to see different information. They will look at structuring differently. So typically when we look at our businesses, we may need money to buy an existing business. We may need finance for equipment and machinery. We may need information for finance for working capital, maybe building a business, buying out a partner, exporting, importing, emergency, or to start a business. So depending on what it is that you're looking for, the banks will request different information from you. But as a general rules, the financiers, whether they're the alternative ones or the traditional banks, look at more or less the same thing. So remember when we spoke about cash flow, so often when you finance equipment and machinery, they use asset finance. So asset finance and working capital are two of the things where they will definitely ask you for your cash flow forecast, because they want to see if the business can afford to repay that money. Okay, so depending on what you are looking to finance, there are different types of finance that we can access. And I always say to the guys, if you're unsure, check in with your financier, check in with the loan supplier. They will be able to advise you in terms of the best possible way or type of finance for your specific needs. So I think the main ones on the left-hand side, they're asset finance. Banks love asset finance because they've got something that they can take back if you fail to pay. So it's typically the buying of a piece of equipment or a vehicle. It's probably the easiest finance to obtain, as I say, because there's something that they can take back. I had to keep bootstrapping in there because somebody actually asked me about bootstrapping the other day, and in my head I thought bootstrapping is doing whatever it takes to get it done, and then I had to go and just make sure that I had the right definition. And basically it means making a plan. So I need to start a business, but I can't afford premises, run it from my garage. I need a delivery vehicle for my business, but I can't afford to buy a new delivery vehicle, use my Uno student car in the meantime. Don't have money to buy equipment, buy secondhand equipment. So doing whatever you can to access that money. I thought what I just want to talk about quickly is invoice finance. So if you are working on big projects, what the banks will often do is they will actually buy your invoices from you. So you may have invoiced, or there is a definite invoice that is coming into the future, but because we can't, the supplier hasn't paid, or we have certain deliverables we have to deliver before they'll pay, we don't have access to that funding. But then the bank will actually provide you with that money until such time as the invoice is paid. Okay. And then obviously, I think for a lot of businesses, an overdraft facility still is one of the easier, better options to get access to working capital pretty quickly. Okay. So if you are planning on getting finance, my advice for you would be to have the documents ready. And that's why I said this morning as well. If you are already running a good ship, your financial reporting is up to date, then your list of documents that you usually required should be more or less up to date or should be fairly easy to access. And definitely they are going to need a profile of your business. They definitely will need your audited financial statements for the previous financial year, and then management accounts for the period between the end of the financial year and the present. They will definitely need a cash flow forecast. See, I haven't been talking rubbish. Bank statements for the last 6 to 12 months. This one always blows my mind because you're probably applying at the same financial institution you're banking at, and now they want your bank statements. And it's like, but you've got them. Anyway, they're going to need bank statements. Founding documents, your personal bank details for the directors, owners, and IDs. As a director or owner of a business, you will also have to complete a personal asset and liability statement. Details of what collateral is available. And, you know, collateral is basically security. So it's if the business were not able to pay the money back, what can the bank take in lieu of that money? That's what collateral is. And details of any personal surety contracts and loan-specific documents. Okay, so it's quite a lot of documentation. And what I find really interesting these days in the banks is the guy that you're talking to, your banker or your relationship manager, is not the person making the decision on whether you're going to get the money or not. They put together a case and they then take it to their credit department, and credit department decide whether they are going to give you the money or not. And what often happens is the banker or the relationship manager will give you a list of all the information that they need. You give them 9 out of 10 documents, and then you wait and 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 you hear nothing back from them. In the meantime, the banker goes, oh, well, I've only got 9 out of 10 documents. I'll wait for document number 10, because credit doesn't even look at the documents until everything is in place. So make sure that when you submit everything. If you submit in tranches of information or parts of your information, the bank's not going to follow up with you. Okay, that guy is working with 500 other clients. He doesn't have time to follow up with you. So if you think your bank is useless, first look at yourself and say, did I submit all the documents that they'd asked me to submit? Okay, so please keep in mind that funders are looking for one thing, and they want to reduce risk. And that means that they're going to ask you for everything and anything that they feel will mitigate the risk of them lending you the money. Unfortunately, because of the way the banks have grown and the way things work these days, it's the whole lending process is a tick box exercise. So it's not, oh, you're a nice guy, we trust you, we know you run a good business. It's not that anymore. Your relationship banker knows this, but he has to put all the documents together. He has to put the plan and the proposal together for credit. Credit then goes, they don't know you, they don't know your business. They go and they look at, oh, all the documents there, all 10 documents, tick, 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 yes. Then they look at the financial projections and the repayability, and they literally use formulas that they've generated over years of working within the industries, and they run the numbers. And if the numbers make sense, then by all means, they'll give you the money. But if the numbers don't make sense, they're not going to look at you and go, oh, Shane, this guy's really great. He's a nice guy. Let's give him the money. No. So understand that if your boxes aren't being ticked in your loan application, you're not going to get the money. Okay. So within those things to mitigate risk, what is it that lenders look for? They look for collateral. In other words, typically, if they're going to loan you money to start a new business or a huge sum of money, they would want to see rand for rand. So if you put in 1 rand, we'll give you 1 rand. Or if you give us security for 1 rand, we'll put in 1 rand. They're going to look at the viability of the business by running the numbers. And here we're talking about profitability over the medium to long term. They're going to look at the affordability of the repayment. So they're going to look at the cash flow forecasts and see whether the business can afford to repay the money. And then they're going to look at a clear credit record for the business and the owners of the business. Okay. So I see one of you guys put in the chat box earlier that in order to qualify for money, you have to be sure of the income before you loan the money. And that's exactly right. So the bank will also want your income and expense statements. And unless you know what it is that you're generating and you've been keeping good records, they're not going to give you the money. Guys, so here's the link to the article that I mentioned, knowledge.finfind.co.za, and the article was called Learn About Funding. And it really is one of the most comprehensive articles that I've come across in a really long time. And it's very easy to read. So even if you look at my list of what are the types of funding that are available, you can click on each one of those and it will explain how it works and what's required from the users. So really, really great little find there. If you copy that over, and go and read about it later on.